But let's talk about the macros. While we've been talking about the equity markets, they're doing very, very well. We just take a bit of a diversion and get on to the macro end of the market and talk about what's happening there as well. Keep in mind that while the equity markets are active, a couple of key events lined up in the evening on the macro front as well. The MPC minutes will be out, and I think we'll do a complete discussion and dissection of what the various MPC members had to say, though I don't think there was any divergence, and therefore I don't think the minutes will bring out something that the market doesn't know as of now. But lots happening on that space, and let's talk about the macros with Mr. Anand Natarajan. Remember, amongst other things, Fullerton has raised 500 crore capital, I think, of Masala Bonds as well, and it's a very interesting thing that we keep on hearing about Masala Bonds, so that is something that we need to talk about as well. He's Head of Strategy and Business Execution at Fullerton India, joins us right now on the show. Thanks so much for joining in, Anand. Now, just before we get on to the Masala Bonds, since there is probably a first of its kind event in India, so to say, that the MPC minutes will be out. You know, all through our lives, we've seen about what the Fed minutes have been. It's the first time we're actually, at least to my understanding, getting to hear what what the members of the MPC Council would have discussed as well. How crucial it is, maybe not for this policy because it was a unanimous choice, but how important is this from an Indian perspective?
I think it's a landmark change in the way the monetary policy and the interest rates are going to be managed. What the outcome is will set, we will see later today.
Of course.
But that I think will set the direction of what was earlier largely an RBI determined set of interest rate policies, how that will change with a broader set of people with a broader range of expertise and knowledge. We'll have to wait and see. I think it sets the stage for a longer term policy around how rates are determined.
That's indeed going to be very interesting. What's also interesting is that Fullerton is raising 500 crores via Masala Bonds, and they're priced at a coupon of about 8.12%. What I want to understand is what really, according to you, makes Masala Bonds an attractive investment option?
Okay. Let me speak about NBFCs such as us. We are largely reliant on institutional funds for our working capital as a raw material, and we continuously look for alternate sources of monies. So, diversification of our funding sources, looking for largely uncorrelated funding options is a key priority. The Masala Bonds offers such an opportunity. NBFCs such as us do not otherwise have material access to international markets for sourcing monies, and the Masala Bonds offers us access and the ability to tap a deep investor base in the international markets.
Yeah. Is this, are the last 6 to 9 months a bit of a landmark change from the Indian corporate bond market perspective as well? Because I hear increasingly a bunch of corporates being able to raise large sums of money, and this gives them the flexibility to not just depend on an expensive source of funding, but tap investors, as you said, across the globe as well. Is this a big change, and will you as an institute also be coming to the markets more often with offerings such as these?
Yeah, because to add to that, Indiabulls Housing, NTPC, etc., are also looking at this option. So
yes, creating a vibrant bond market is a major initiative that I think the regulators have been pushing. The last set of regulatory changes that came in September of this year added to the nuance around making it a more vibrant market. Getting bond market, capital markets to fund will increasingly form a major part of the funding options, and to that end, will increasingly play a larger role in any corporate's funding strategy. As far as we're concerned, we've always had access to domestic markets. Approximately 50% of our funding comes in from the capital markets,
sure,
and 50% comes from the bond markets, but it's been largely a domestic capital market.
I agree. No, my perspective was more from a perspective of how corporate India, and not just you as an institution, because a lot of companies didn't have that access and now probably do. For the benefit of our viewers, and I think we need to cut across to the Commerce Minister as well, but just very quickly, for the benefit of our viewers, what's the benefit to an organization for which they use Masala Bonds as an option vis-a-vis the conventional sources of funding? Is the interest rate differential fairly high? How do you?
The interest rates our competitor. They are generally priced below bank financing rates. They may be slightly costlier at this point in time than domestic bond rates. But as the markets deepen, as there is a yield curve that starts being established in the market, as institutional investors in the international markets start appreciating the credit, you will see improving yields and the increasing attractiveness. You get greater liquidity, so more people are able to access the markets internationally. The yield curves will start showing the liquidity and the availability of these monies, and over time, as you get a broader credit spectrum.
So you did this only so that you can access international investors, because otherwise you're saying that there are conventional sources, domestic sources are cheaper.
Marginally cheaper.
Marginally cheaper.
Like I said, we are always looking at diversifying our funding sources, and therefore this adds to a diversification.
So now do you see corporate India and NBFC's dependence on bank borrowings coming down due to Masala Bond?
Bank borrowings will continue to form a part of any NBFC. What this adds is a more nuance and a greater variety of funding sources.
Okay, we'll have to call it a day here, but thank you so much, Mr. Natarajan, for joining in today. Cut across to the Commerce Minister discussion.
We were also under stress. Now, we are asked